Welcome to Currency Watch. This is Chris Keene from akeenpointofview.com. It was one of those days where it looked like we were ready to move higher on Thursday as most of the majors moved up against the US dollar in Asian and European trading. Once North American traders came into this fray, though, bad data pushed the pairs down to test new daily and for some pairs yearly lows. In late North American trading, we did have a bit of a rebound of most of the majors against the dollar. But heading into tonight's trading, we should see range-bound activity because tomorrow is a release of non-farm payroll, and this could lead to illiquidity in markets as most traders could be standing aside waiting for that crucial data point. So let's look at a few pairs that could be that are in tight range with strong support and resistance heading into the evening. The first is the Euro USD. As you can see, the Euro USD has been riding this trend line lower since the middle of May, and it has bounced off the level twice in the last few days. If we could get it pushed down towards this trend line once again in Asian trading around the 123.30, 40 level, buyers could come in to push the pair back in a more stable, pretty much deadline range. If we get a push back up into the 124.25 areas, we could find sellers that would protect that support level. Heading into the data release tomorrow, depending on the outcome of the non-farm payroll report and more importantly how it's translated, we could see a push higher towards 125 or a break. If we have a break of this trend line, the next major level of support is all the way down at 121.50. The next pair of interest is the USD CAD, the CAD cross. The CAD cross broke higher today aggressively after the disappointing data and with falling oil prices and broke above the 103.10 level. It moved as high as 103.60 in mid-New York trading. The pair fell a bit, but it is now we have old resistance is now support at 103.10, and all the way up at the top, 104.20, we have strong resistance. If we get a move back to 103.10 or 103 area, I would expect that buyers would come in to stabilize the pair heading into a quiet night of trading. After the release of non-farm payroll, if we're still around this 103.10 area, this could be pivotal. If we stay above it, we could have a move back up into 104.20. If we break below, we could have a move back down into the 102 area. The last pair I'm looking at is the New Zealand USD cross. The New Zealand USD cross, as you can see, broke after breaking below this trend line earlier in the week, moved down aggressively to tag this 0.75 area. And after trying to move up higher, it ran into the yearly trend line that has been holding the pair up since last March. This trend line had acted as strong resistance, and the pair moved down again to test 0.75. So as I said with the other pairs, going into tonight, I would look for any moves towards 0.75 or up to trend line resistance around 0.75670. 70 to see if buyers or sellers come in at this point to keep the pair trending. Heading into non-farm payroll with this pair, I would look for any sustained move above the yearly trend line at 0.7568 to lead to a move higher at first resistance would be 76.50. But as long as we stay below this yearly trend line, I would have to keep in mind that my bias would be for the pair to move lower, first towards 75, then towards 0.7460. So as a quick review, heading into tonight's trading, I would expect slow range-bound trading because of the release of non-farm payroll tomorrow, and the way to play any trades would be for short-term scalps off support and resistance levels. That is it for Currency Watch. This is Chris Keene from A Keen Point of View. For any updates or information on individual pairs, visit keenpointofview.com.